Well, figures out this morning show that gross domestic expenditure rose just over 12% in the first quarter of this year, but it appears that consumers aren't at all convinced that the economic recovery we are seeing worldwide will lead to an improvement in their circumstances. The latest MasterCard Worldwide Index of Consumer Confidence shows certainty in South Africa at its lowest since the survey started 6 years ago in this country. Joining me with more is independent economic advisor Dr Roelof Botha. Roelof, thanks for coming in today. Roelof, confidence down from 6 months ago and also well down from a year ago, and that was while we were still in a recession 12 months ago. What's up here?
Well, it's slightly frustrating, the survey results. Important thing to note is that it is still in positive territory. 50 is the distinguishing line between positive and negative. So we are positive. And if you look at the individual indicators, you'll notice that the one with the largest decline, the only significant change was in fact the stock market. And when the survey was actually conducted, that happened at a time when share prices had fallen back a little bit from these almost spectacular gains. 42% over the last more or less 17 months. So it seems as if the respondents have short memories, but they do read the financial news, and they probably watch your program.
Of course, you conducted the survey between March and April, so as you say, that was after we'd seen those magnificent gains. Since then it's tailed off, and of course the outlook for the stock market isn't as great for the rest of this year because of the gains that we have seen. So do you think that's really a factor that's guiding their expectations here?
Yes, it was I don't want to criticize the timing of the survey. I mean, this type of information surveyed by MasterCard is incredibly valuable also for policymakers. But it was at a point in time of South Africa's history that it was a little bit too early for the World Cup and all this euphoria and the tourism growth and hospitality industry growth. And it was when socio-political tensions had been rising due to calls for nationalization. There was a spate of farm murders. And the sentiment in the country was not good. You can also see that in the quality of life index. Now, since then, with the first Super 14 semi-finals at Orlando Stadium and this spectacular tournament that we are hosting with so much success that everybody was expecting power failures.
Even though we've been knocked out.
Well, we went out gracefully, with 4 points on goal difference. It's not that bad.
So do you think if we conducted the survey today, the results would be a little bit different from what we're seeing here?
Oh, without any doubt. As a matter of fact, I'm predicting that the next MasterCard survey, our index will jump from where it is now, just under 60. I would be very surprised if it doesn't move to 75 plus.
Now, of course, this surveys 10,500 consumers across 24 markets. You've got a couple of other African markets who are included: Nigeria, Kenya and Morocco. They started to be included from the previous survey. Nigeria, the most confident African country surveyed, fell slightly from 89.4 down to 83.4. But African countries outside of South Africa appear to be quite optimistic at this stage compared to us.
Well, in Nigeria's case, there's a little word with 3 letters. It spells oil. So while the oil price is where it is right now, I would be very surprised if they drop to under 80. There are other reasons. Commodity cycle recovery has been spectacular, especially for metals and minerals. The average gain in metal commodity prices since the low of 2009 has been between 70 and 140%. And other African countries are more reliant on commodity exports than South Africa. We've got a highly diversified economy, more tertiary sector activity. So that doesn't surprise me that they are marginally higher than us. I would have been surprised if it was the other way around.
Of course, Kenya rose very nicely from 47.9 to 73.5. But of course, last year in Kenya was a particularly bleak year. They had drought and they also had come from some electoral violence the year before. So are you surprised at the rebound we're seeing in the Kenyan market?
No, that was predictable. And once again, I think it shows the MasterCard survey it's got its finger more or less on the pulse. There's one other issue. You touched on the two most important ones, but there's one other issue, and that was the global recession took its toll on Kenyan tourism. Poor people don't visit the Serengeti. They come from Europe, and as far as I know, some of those shuttles have now increased their traffic twofold and even threefold. So the tourists are coming back to Kenya. So everything is going in the right direction. They also had good rains, which is brilliant news.
And of course, we know, just talking to companies, particularly global companies, their eyes are on Africa at this stage. They're entering Africa looking for opportunities, and that should help keep confidence buoyant going forward. Would you agree?
Yes, absolutely. I mean, It's common knowledge that sub-Saharan Africa has been called the last frontier. The IMF is predicting growth of close to 5% for this year for sub-Saharan Africa, rising to possibly 6% next year. And several African countries never went into recession, which is fantastic. South Africa only had 3/4 of negative GDP growth. So it's the place to be, especially because of the deepening of democracy in a number of African countries, Zimbabwe excluded, of course.
Perhaps just taking a look at the 3 cities that you look at specifically in South Africa, Johannesburg, Durban and Cape Town. Johannesburg comes out as the most confident city, and that's despite us not having the sea at our doorstep. Why are Johannesburgers more confident?
Well, I know we don't have a Table Mountain and we don't have the vineyards. But in fact, Gauteng and Johannesburg in particular is South Africa's premier tourist destination for a variety of reasons. Plus the commodity cycle recovery, plus the completion and almost completion of a number of major flagship infrastructure projects. We're looking at Gautrain, we're looking at the Ben Schoeman Highway, we're looking at the R21, and it's visible. You see it all around you. You see people working, busy. Joburg and Gauteng are hosting the bulk of the matches. We've got 3 venues. So there are several reasons why Joburg is way on top. One thing that we mustn't forget is that at the time of the survey, that was more or less when the negative sentiment surrounding the Transnet strike hit Durban and Cape Town. And they are South Africa's 2 major multidisciplinary ports.
And of course those ports ground to a halt, didn't they?
Oh, it was terrible news for them. I mean, it was nothing short of a disaster. The Transnet strike was really bad for us, very bad.
And of course, just finally, because employment is one of the issues that came out, and of course we saw those jobs numbers coming out of Stats SA earlier this week, 79,000 jobs lost in the formal non-agricultural sector in the first quarter of the year. And of course, talking about Joburg and a bit more optimistic, with all of those projects on the go, our employment situation couldn't have been as bad as it was in Durban or Cape Town.
Yes, exactly. You know, what frustrates me a little bit about the data that came out yesterday is that this more or less the same data came out 6 weeks ago. This survey is the one that also includes the average remuneration, and that's why it takes them a little bit longer. But we knew this 6 weeks ago, and now it's being published in the media as if this is new data. It's not new data. The fact is that we lost a couple of jobs in the first quarter of this year. I'm convinced that we'll return to positive employment growth in the second quarter, and we are still up from 2003. Formal sector, 734,000 jobs. So I don't think we should be overly negative about that one. Employment is a lagged indicator. You can have easily 3/4 of significant positive GDP growth after a recession before formal sector employment comes to the party. And we're on the verge of doing that right now.
Well, we have to leave it there. Thanks very much for coming in. I'm sure next time you come in, we're going to come in with much better news.